All right, welcome everybody. Liquid Sundays, SPX market overview. This is Morpheus, and thank you all for joining me tonight. We're going to look at our SPX weekly chart, but first, I'm going to go over some of our notes. I post daily, weekly notes and alpha alerts, key macro, technical information, fundamental stuff. Um, Try to keep everyone kind of understanding what's kind of going on under the hood. I am primarily a day trader. I do provide swing trade ideas and trade specific, options plays. I'm a primarily an SPX options trader for those of you that are new here. But a little bit of my background, I started off trading crypto over 11, 12 years ago and migrated to penny stocks. I traded, I started trading commons shares. I started actually trading short in 2021 and started to find that options was my preferred instrument for trading. So I kind of focus primarily now on SPX options. I do trade ES futures, NQ, the micros. I trade silver futures, gold. I've traded crypto futures. I've traded it all. I've lost a lot. I've learned a lot. I've come out on top, and I'm here to help whoever is willing to listen. Whatever has resonated with me over the years, technicals, psychologically. I am here to share that with you, and hopefully, you can take a piece of what has worked for me and make it work for you. So, anyway, with that out of the way, I just wanted to bring that up. I mean, I see some new faces here, so just a little bit of my background there. So, anyway, all right, let's jump right into today's notes. U.S. stocks had a rough week overall, dragged down especially by weakness in technology and financial sectors. The market is showing extreme division, bifurcation. Growth tech areas are struggling, but defensive stocks plus industrials, materials, and energy have stepped up with solid rallies to help hold the broader market together. I'm cautious and I think near-term downturn could be coming, but there still could be a chance for the S&P, SPX to push higher towards 71, 7,200. That will probably require software stocks and much of the Mag 7 to start recovering and leading again, which hasn't happened yet. That needs to happen ASAP. Expect more nerve-wracking volatility. The VIX is high, to stick around for the time being. The short term price action isn't very encouraging for trend followers. So if you were trying to buy the dip, like pretty much every move after last April tariff liberation day, you're kind of getting wrecked here. So you gotta go with shorter time frames. Day trading works very well in this environment. So even after Friday's bounce. On the hourly SPX chart, the recent decline pattern doesn't scream major bottom yet. We'll get down to the hourly in a few. Friday's rebound came after a better than expected CPI report, bouncing off support. We were looking at 67.80 to hold for that. Well, like I said, we'll get into some more granular charts in a few. Heading into next week, the 6900 to 6918 zone looks crucial as initial support and resistance. Breaking above 6918 to 6925 would be a positive sign for more upside potential. But if technology doesn't deliver a strong snapback rally, we could see more downside pressure. Plus, plus some shorter term cycles are pointing to increased volatility ahead. Overall, it's not outright bearish yet, but it definitely calls for close monitoring until clear positive trends emerge. So hopefully you all follow me on that. I've been talking about this since the end of last year into this year. Cycles kind of lining up with potential correction. We've had 3 consecutive plus 15% years back to back to back, even with the flush in April last year. So just keep in mind that cycles are pointing that, but it's not correct to get outright bearish until this overall trend actually does start to break down. Because I'll just show you here. We'll just zoom out here. So we'll start looking right into the chart here. Here's your weekly chart. So here's your April lows from 2025. You can see we're still like kind of right on the edge. So this area starts to break down. We can certainly come visit some of these swing lows down here, and that's where we're going to start looking for. And once this starts to break down, we'll um, start kind of looking at things through a little bit of a different lens. We're still very choppy sideways. I wouldn't say, we're not in that bear market territory. You could definitely argue that tech is in a bear market right now. I mean, many of the names are down significantly off their highs. But anyway, here's the weekly SPX chart. And what I do every Sunday is I just give a broader, context here. I have lots of indicators in my tool bag that I use for different things. So when I'm day trading, I technically just kind of look at candlesticks, and I set my levels, I set my plan, price action, structure, liquidity, draw from on buy side and sell side. That's my primary focus, but I have lots of stuff for trend, looking at trend and different, kind of tools, stuff like that. A lot of my tools that I use are LuxAlgo makes some fantastic tools, lots of free stuff. I have a template that's set up just for a lot of that stuff here. And one of the things that I will look at on larger time frames, like on weekly charts, monthly charts, daily charts, is it's called market sentiment technical. So right here is one of my kind of kind of cool indicators that I use from LuxAlgo, and I'll just give you just a quick look at this. Okay, so you can clearly see here the market. Obviously it was still trending up here, and we have bearish divergence here. So that is bearish divergence on the weekly. And if you look in the past, when you get bearish divergence on the weekly, you do tend to get some sell-offs. It's not you know, the holy grail, but it's something to be mindful of. So if you look here, this dashboard here, it gives you like a whole rundown of, overbought, oversold, neutral. It's got RSI, it's got VWAP, Bollinger Bands, stochastics, CCI, a bunch of stuff. That on the weekly chart, everything's still pretty bullish. And this meter here is kind of indicating that on the weekly chart we're still technically in a bullish environment. So something to be mindful of. If we drop down to the daily, you can see things are obviously bearish, right? This little dashboard is giving us a lot of different signals. You can see that the bearish divergence kind of playing out here. And if you look at um, just from price structure here, we've been pretty much sideways and pretty much in a box here, going all the way back here to the end of last year. We're below, October highs, so pretty flat. Market hasn't really gone anywhere since October, so kind of choppy. And heading into October last year, I said we're gonna hit some volatility, some choppy market, and that's what we've got. We've got a very choppy market. If this was a daily chart here and you were trying to day trade this is difficult to trade, right? So anyway, just want to point that out. So we're starting to look, we're still in this range here, testing the bottom. This is going to be, pretty important here. Um, so we'll keep an eye on that on these lower levels here. Let's look at kind of what our game plan is heading into this week here. I will get rid of this here and we'll just focus on some candlesticks and some fibs, which is what I really like to um, use to devise my plan. So we'll hop right back to the weekly chart. Okay. Very simple. I have a pretty standard, simple approach. Every week I take the previous week's candle and I take my Fibonacci tool and I take the high and the low. Okay. And I take, I'll snap from high to low and low to high. And that gives me um, some levels to go off of. So primarily what I'm going to be looking at this week, heading into this week, is are we trading above 50% of last week's candle, which would be 68.95 ish? If we're trading above that level, I'm going to look to some of the levels above. So 69 18. We talked about 69.18 as a key level to kind of recover, on the hourly. And on the downside, obviously, if we're trading below 68.95, we'll look at 68.70 and then some of these lower levels here. So heading into Tuesday, I mean, the market, we can like just get a quick, here's a Bitcoin chart, but let's just look at US 500, which is the SPX session. We're trading at 68.41 right now in the futures market here. So if you look at that, let's just say this was, let's just say this was Monday morning open. Okay. Let's go back to the chart here. So are we trading above 68.95, 68.95 or below? Clearly we're still below. So, we're basically looking at last week's candle. We're still pressure to the downside if we can't get above 68.95. If we can get above 68.95, I'll look for 69.18 and then 69.25. And then obviously, should we rally up and break above 69.93, 67,000s? This is some of our upper target on the extension for the fib on the weekly chart. On the downside, 67.95, 67.80 is really important. So Monday's 2 week ago low is, we bounced off of that, held that level last week, but this is critical. Should we lose this on a weekly basis, we will flush down pretty, um, I think, in short order. I think we will come right down, test, 67, 66.73, um, you know, and I think that'll start the, quote unquote correction that we're kind of anticipating for this year. Not going to try to call it either way yet. That's not how I work. I need to see evidence. We're still technically, choppy environment. We'll see what happens. So, before the market opens every day, I give a pretty detailed plan, long, short, entry, stop loss, take profit. So we all know how to handle ourselves on a day-to-day basis. But top down, are we going to be trading above 68.95 or below it? We'll find out come Tuesday market open cash session. So here's the first thing that I look at. So I've got some levels that I can kind of base off of. Now I go down and I'll look at the daily levels. Okay. So I look at SPX, the SPX chart, the SPX daily chart from the last traded day, which was Friday. Okay. So I take Friday's candle. It's this little shrimpy doji indecisive candle. I take um, the high and the low from that. Okay. And I dissect it a step down, one step further. So high to low, 68.81, 68.38. So technically, like right now, we are in like really indecisive, right? Because you can see US 500 is pretty much there. Okay. Should 68 36 act as resistance, 68.38. We'll push down and we'll look at some of these levels here. On on the downside for more near term, I can just basically take the low to high here, and this is how I kind of figure out where we could potentially go within the next trading session. So on a daily chart, I look at what the extension is here, and I look at what the VIX is, and I look at what the implied move is. Depending on how high the VIX is the gauge on how far away our targets are going to be, how tight our stops need to be, how big our positions are going to be. So that's all really important, right? If the VIX is trading at, a 15 or a 14, a 15, a 16, we're potential for, not a huge range, maybe a trend day, maybe chop. But if we have a high VIX over 20, 21, 22, there's a good chance that should the VIX obviously spike, the market will sell off and we get big moves, right? Big swings. And on the other side of that, if the VIX is high 22, 23, and it rolls over and it drops below 20, then the market can rally. So I look at this stuff, kind of on a daily basis and kind of determine how much of a move we're going to make in a week, in a day, and obviously in a session. So, um, a breakdown of 67.95 here. You can see 67.42 is important. So we know that 67.80 is our critical level. So should we lose 67.80 intraday, there's a pretty good chance that we're going to swish right down here to 67.42. 67.20 is really important. You can see here that is December lows, December 17th lows over here. And then we'll see how the market reacts if and when we do hit those levels here. So if you look at our hourly chart, another enhanced view, if you will. I'll show you what we can kind of look for on the hourly chart here. I'm constantly looking at market structure and trend lines, right? So example, let's just go back in time a little bit here. Every time the market kind of starts, we're pretty. This is very sideways if you look at it. I mean, technically, it's not up or down, right? We've sold off, we've rallied back, but I do draw trend lines. Hourly trend lines are important. So what I'll do is I'll say, okay, well, when we started heading into this week here, I said, all right, well, it looks like we have a trend line to the downside. I'm not getting overly bullish until we, or I'm not getting too excited about a rally until we recover this trend line. Okay, and again, you can do that also on the flip side, right? You notice a a a trending stock up and you see there's a trend. Once it starts breaking down, right? You can do the same thing. Once it breaks down, okay, I'm not going to get. Let me rephrase. Once you start recovering your downtrend line, you establish an uptrend line. All right, I'm not going to get overly bearish until I break down that line, right? And you can see that same thing happens. So, but heading into this week, we are kind of setting up another trend line here, right? So you can kind of see right here that we've got, something like this that is potentially needs to be recovered first. And this kind of lines up right with some of our levels here. So here's one trend line. If you want to take, actually, I kind of like will look even farther back sometimes. So here's like more of, I think, the important level to reclaim for new all-time highs. Should we get over our 69.25 level, right? But more near term, this is an hourly chart here. I can see clearly that we've got some points of reference here, and it looks like we might this might act as resistance should we get back here back should we get back up to this trading into the overnight or trading into Tuesday session, which I suspect that we will likely get a test of this, potential, break, and then we really need to recover this. There's this big drop down here. This is kind of like the gap that we need to kind of get back up above here, right? So this is what we can kind of look at. We'll get a better picture heading into the session, and you can use US 500 um, for after hours if you'd like. And you can see here, right? Here's where we're trading at currently. So you can take this swing high here to this swing high here, and you can see that we need to recover this level here. And then once we start getting back up above 69.18, 69.20, this level here, we can push back up and possibly challenge for new all-time highs. But I don't want to get ahead of myself, so this is kind of what I'm looking at. Let's get a little bit more granular. Let's go into the 15-minute chart. Um, okay, 15-minute chart. So this will take me into the trade review portion of today's um, class. Let me get rid of this here. Okay. So, first thing I want to look at is the difference between Thursday and Friday. What is um, what looks like the clearer chart to trade? What looks like it's easier to trade? And when I look at it, I say, well, it looks like Thursday was a lot easier to trade, right? We had a big sell off, nice waterfall here. This is 15-minute, but if you look at it on the 5 minute, it was kind of like a nice kind of controlled down. And we had like our A plus, order block, fair value gap, and this started to develop, after 10 a.m. We had key levels here. Let me bring up the plan from Thursday. So we'll review Thursday's price action. We'll look at the plan from Thursday and what transpired, and then we'll look at Friday and we'll see when it makes more sense to kind of maybe sit out, right? So this was the 12th. Let me bring that up here. I'll put that right on the chart here. Okay, here is. Let me see if this can. I was just going to take the bearish portion of the plan, but I'll just take the whole plan so we can get an idea. If anybody wasn't here or didn't trade it, you can kind of see what we were looking at here. So I'll just take this, copy, paste it, and put it right on the chart. And if you do get my plan, in Alpha Alerts, or if you get it, in the chat or something like that, put it right on your chart. You know, why not? Try to. What the hell's that? Try to put it on your chart so that you can keep yourself honest. A lot of what I'll do is when I'm taking a trade, or when I'm looking at a plan, I'm looking at, am I following my plan? Because sometimes I'll make a plan and um, it does. Sometimes I'll make a plan, and sometimes you find yourselves like not following it. And what's the point of having a plan if you're not going to follow it? Once you start seeing like you're not following your plan, um, you probably shouldn't be trading that day. So, I mean, this is still things that I have to like kind of tell myself, you know, daily when I'm getting into trades and stuff. I'm like, okay, is this following what I wanted to do here? Okay, so here's Thursday, I believe. Let me see here. All right, and I always frame everything on a 15-minute chart. So let me make sure that the text is kind of a good size here. Can everyone see that? Can everyone see the plan? Can you read the plan? Can you understand? Like, um, I don't want to put it up here if you can't see it. Okay, I think it's a good size. Let me make it a little bit bigger. Hold on. Let's go. Let's do 18. Oh, maybe we can do it 20. Here we go. Okay, excellent. All right. So for those of you who are following along, for those of you that followed on Thursday, you've got key resistance at 69.72. So this plan came out before the bell, right? So the bell is here, and I posted this plan pre-market, and resistance 69.72, pivot 69.63. I'm going to mark these out with my little line tool here. My trusty line tool. Okay, so here is 69.72. Okay, there's that. And you can see, if you look back at prior sessions, you can see where the resistance is. So here is our resistance level that we were using for Thursday's plan. So here is 69.72. What the hell? Hold on. 69.72 resistance. Beautiful. Okay. 69.63 was our pivot. So where's our pivot? 69.63 is here. Right about here. Okay. Mm-mm-mm. Sorry, I need to make this. I need to make this look nice, or I won't sleep tonight. Okay. Here's 69, 69, 63 pivot. I can move this up just a little bit. Okay. All right. What do we see here right off of the open? You see a wick, right? A top wick, and you see a order block. So this is the market is kind of trending right up from the PM session, the Asian session here overnight, the London session kind of sideways. So we got a nice kind of tight range. And then you get this beautiful rejection off of 69.72 and an order block below our pivot. That's what I call key price action at our key level. So this is telling me I have a level that I have price action that's telling me that it's validating my plan. I can go short at 69.63, right? And I can at least test our support. So support was 69.54. 69.54 is, stand by here. Uh, Tight, right? I mean, it happens pretty quickly, but there's 69. Okay. Okay. So breakdown of this is supposed to be and the reason that this was my support here was because you see these equal lows here in the Asian sets. These are 15-minute charts, so 15-minute candles on the 15-minute chart. So I'm looking at these levels as important support levels that if they break through, we're going to go down and we're going to test some of the lower levels pretty quickly. And how do I come up with this plan? How do I come up with these levels? Well, finding support and resistance kind of easy, but knowing what those levels are to plot out is where the skill comes in, and that's what I kind of have to figure out. Where's the best level to kind of plot off of? So it was a tight range, but if you see here, like I'm just gonna show you how I kind of figure this out. So I basically took 69.72 as the resistance level, and then the support level right here. And this is how I get to like 69.45. So a break below 69.54 gets us to 69.45. But if you look at the plan, um, basically the way that it's written out. So strong fade rejection at 69.72, wick and stall. That is this. You can see that right there. Okay, it's on a 15-minute. But if you're looking on a 5-minute chart, you'll see that you get kind of like a double top or whatever order block, and then fair value gap, on these lower time frames here. Once we start breaking down the support levels, I just need to follow my plan. So, if you look here on the bear case, break below 69.54, bearish shift, target 69.40 to 69.25 zone. Why? Well, because there's support levels down here, right? 69, 69.25, and then obviously 69.12. This was the type of trade that it happens quick. Your execution needs to be kind of on point. But once you start hitting those targets, you just have to follow the process. You have to look at what was my risk to reward and just follow it. So I'm breaking down below 69, I'm getting a wick off of 69.72. I'm breaking down below my pivot. I'm going to test my support. So, there's some consolidation here, basically, and then a breakdown of my support here. There's a fair value gap. Boom. I'm getting all sorts of, I'm checking all sorts of boxes for this is working in my favor. This is following my plan, and I just need to follow it and execute it, right? Um, and then we got this flush down here, right? That was kind of um, you know, um, storybook, perfect scenario. It just worked. It just flowed. There wasn't much you kind of had to think about. But what you don't want to do is you don't want to get in and try to catch this move on the way down, right? This move is just like the VIX is rising on this move and premiums are getting juiced. The last thing you want to try to do is try to number one try to catch a falling knife, right? Because that wouldn't have worked out too well. I mean, even if you caught the bounce here, this thing chopped around, until the afternoon, and then kind of like continued back down into the PM session, and then obviously, you know, kind of accumulated for the AM session into the next day. So that'll kind of bring me to the next portion here, and that is Friday's action. So this was much less straightforward. Um, we had CPI in the morning at 8:30. So if you look here, this is our 8:30. So what I'll do on volatility events and days like CPI, non-farm payroll days, FOMC days, I kind of take a different approach. Not necessarily FOMC. That's a little bit different, but anytime there's data driven kind of volatility in the morning, I kind of I don't necessarily disregard the previous two sessions or the previous session, but my main focus is that that volatility candle. So what I do is like I take that 8:30 candle here and I take it all the way up until the bell, right? And you can see here, I'll take my fib tool and I'll just basically take the swing high to the swing low there. Okay. And I'll just formulate my plan right off of that candle there. Um, let me see if I can get this. So yeah, there we go. It's a little better. You can see it a little better there. Um, I'll basically take this volatility candle, swing high to swing low, and now I can kind of target, a breakout above what's the extension here. And this thing, almost like it had eyes, heading into well, not I mean, you can see here there was a fake move, off of the open, right? There was a nice flush down and then this huge wick off here and then another volatility candle here that wicked right off with very wicky price action. So, kind of a false breakdown here off of the open, but nonetheless, I mean, you could have absolutely traded this, but you just have to be aware that the time of this trade is so quick. You can't hang out in it, right? So the plan from Friday was, resistance at 68.48, support at 68.22, and the pivot was 68.35. Well, we were kind of wicking off of the pivot, and shorts were kind of working off of that off the open. And obviously, if you were in, you caught a real nice piece of this, and you could have definitely taken this down. I mean, I'm in a trade like this. I'm looking at the 5-minute opening candle, and then I'm looking at basically that as my pivot, which works well with the 68.35. And then this kind of swept right down. But if we look at it, let's look at this on a 1-minute time frame. All right, I'm going to let you know like how much time did you have? How much time did you have from when this broke down to when you had to be out of it? Right. So here is here's the open. Okay, here's 9:30 and a little bit of kind of a little bit of a push up here, and then once this breaks down our pivot, once this breaks down our support here, you had one, two, you had 3 minutes. So if you shorted this close here at 68, let's just say 68.16 on a 1-minute time frame, this thing flushed right down. But you want to be getting out of these trades. I'm always like, when we have stuff like volatility events and data stuff like this, I'm always emphasizing in the in my off of my alerts, off of my alpha alerts channel, 2 or 3 times a week, I do I'm almost every day, but at least two or three times a week I'll do, a very detailed technical analysis of what exactly is going on at the moment. And should I be short, should I be long, should I get out, where's my stop, what do I do? And that's kind of what I'm preaching. I'm once we're taking shorts here and we're kind of selling off here, I'm saying if you're in shorts here, congratulations, be nimble, stay vigilant. Don't, it's a Friday. Don't fuck around and find out. All right. Because you will fuck around and find out if you try chasing stuff like this on a Friday, on a CPI Friday. All right. So, you had 3 minutes to get in and out of this trade here. So you need to be on your game. You need to be on point. And then this thing, bounces back up. It recovers our support level, and our pivot on Friday was pretty useless. Not that it was useless. I mean, it did some. If you were looking at 15-minute time frame in the morning, you were you can see. Let me just get a little bit of a clearer picture here, because I was looking at this and I was saying, well, it's kind of respecting our pivot. Let me bring that up. 68, 22 and 68. What did I say? 48. I'm gonna have to blow this up a bunch because it's just a tighter range here, right? There's whatever. Okay. So let me just show you what I was looking at. Kind of like just trying to decipher. Okay, does this make sense here? Look at. I mean, we were getting big, big pushes up. Resistance off of our breakout level. So I wasn't really looking to go long on these long wicks here, right? And it was like it was pushing these candles down below our pivot. So it was kind of giving us a good area to trade off of to the downside, but at the same time, it was very wicky. It was not very straightforward. This was obviously nothing like Thursday or like some of the other days that we've had that are just kind of picturesque. Not a great day. CPI Friday. I mean, yes, once we do, kind of recover these levels here, and now you're getting basically that there's a little bit of an SR flip here, right? So you can see here at 10 o'clock we do get a candle. We're getting top wick. Take a look at this. So here's 9:30, 9:45, and 10 o'clock. So before 10 o'clock, like we're getting a lot of resistance, and then the resistance and that pivot kind of flips, right? You get a wick off of our support level here, close near the high. This thing pushed up immediately and and tapped our target. Um, you know, I mean, but how much time did you have to trade that? You know, you had literally it's tough because you didn't really get a close. Above that level, it was kind of like right at it. You had this bullish candle here, and once this kind of pushes up and hits our target immediately, you're not necessarily trying to get into the long there. You don't want a long your breakout when you're, you know, 10 or 15 points above, the level. You want to try to get in on the breakout level here and take profit here. That's kind of the mentality. But you had 5 minutes to do that. 5 minutes to do that if you're looking at that on a 1 minute chart. And so anyway, very choppy. I mean, but this did eventually kind of push up and it hit a lot of the upper targets, but trading it in the morning and even into the afternoon to lunch, and then obviously there was a nice rollover in the afternoon, but very choppy, very choppy. Um, so that's Friday wasn't ideal, but I do emphasize a lot. I say size down on Fridays, size down on volatility events. Not all trading days are created equal. So just remember that. If I was a betting man, so I did also want to bring up, this looks a lot like um Wickoff um Wickoff reaccumulation. So basically this dip down here, uh this is a little bit of a kind of like a reaccumulation channel, and then this is your spring here, and then this is the retest of the spring here. And I was kind of like, maybe this is the reaccumulation. So if I was going off of that chart, I would say that this does rally back up. And at least test some of these levels up here at the very least. But I guess we'll see what happens heading into the overnight, heading into tomorrow. futures will be trading, and then obviously Tuesday open. But yeah, this looks a lot like when did I when was this it here? Kind of. I have to look. Was this? Not exactly. I have to look in the archives here. Um, yeah, so I could take some questions if you'd like. But I will let me button this video up here and I'll post that for people on the YouTube and in the chat.